This is iTrader using the Indicator Incubator Ninjatrader 7 platform charting tools. Here I am demonstrating the iRenko Trader adjustable candlesticks and the I-bands dynamic price channels. The market has had a significant sell-off and is now showing signs of a bottoming pattern. We only take long entries out of higher pivot low base setups, and we only trade short trades or short entries out of lower pivot high base setups. We utilize the iRenko to see angular price action, in which we call geometric price action analysis. This is visually intuitive trading to see repeating patterns and the same repeating patterns day after day to pick high probability entry points. In this example, I will be trading the NQ contract out of a sequence of higher pivot lows. I enter the trade and immediately put a stop one tick below the recent price pivot. I will put initial target at a minimum 2-to-1 reward to risk. We never place initial targets less than 2-to-1 to 3-to-1 reward to risk. The trade is now protected, and now it is time to enter targets. We have entered the trade after the market pierced outside of the lower I-bands channel in a sequence of higher pivot lows, counting those higher pivot lows for the geometric price action that is traded outside of the I-bands. Looking at our risk here, moving it to break even now that the market has moved equal in distance to what our initial risk position was. We trade geometric price action analysis, taking advantage of repeating geometric price patterns that play out in the markets day after day. This is a visually intuitive style of trading. And the overall style or method of trading is trend following mean reversion. We trade entries that follow the I-bands trends in alignment with higher pivot low entries for long setups and lower pivot high entries for short setups. In this example, I have moved the stop up to at least pay for commissions, and as the price action approaches our first target, we will lock in slight additional profits. We have the initial target for our first position at 2-to-1 reward to risk. The final position is beyond 3-to-1 reward to risk. As the trade plays out, we have moved our stop up to just below the recent price pivot by one tick. As the market advances to our 3-to-1 reward to risk point, we will now lock in additional profits to at least maintain 2-to-1 reward to risk. We're holding the final target order in a pending mode, ready to drop the order into any upward movement of price action beyond the 3-to-1 reward to risk price point. We've dropped the order and it is pending at this time. This is our final profit target order. Once that is filled to complete the trade, we now need to remove our final stop that is no longer needed. As you can see, we've achieved beyond 3-to-1 reward to risk on that final position. The market had a significant sell-off from the 8:30 Chicago Open going forward, and we are now taking advantage of the market starting to show some sequence of higher pivot lows. There was many opportunities to sell this market, and this is an example to show that even though the markets had a significant sell-off, using geometric price action analysis and our charting indicators, we're able to target optimal entry points. The market built support. There were several higher pivot low entry points as price traded below the I-bands. And in this example, we achieved 2-to-1 reward to risk on the initial targets and 3-to-1 reward to risk on the final target. Using geometric price action analysis, trading a trend following mean reversion style on this NQ example, it was $305 profit before commissions. This is a visually intuitive style of trading and works on all markets. If you have any questions, contact support@indicatorincubator.com.